For those who own Ethereum and XRP, what is happening right now is truly historic. One of the most significant liquidity shifts of the decade may be about to unfold as a result of current trends in the cryptocurrency market. The spotlight is now on Ethereum, and when that happens, the rest of the altcoin market, particularly XRP, doesn't merely follow suit, it explodes, according to history. What's happening with Ethereum today could trigger the largest XRP rise to date, and you're going to find out why this moment is essential. Your money isn't being advised here. A lot of money is going into Ethereum right now, and anyone who has been in this market for a while knows what it means. Institutions and whales ride the ETH wave to their destination. Then they reinvest in the next major player. The altcoin space will be utterly chaotic after that. I am sharing this video with you today because it appears that we are on the verge of reaching a critical stage. I have something really important to show you before we get into what Tom Lee just said on the future of Ethereum and how it will affect XRP's next move. Discover 100x Stocks, the Ultimate Millionaire Investor Guide, is available for download in the pinned comment. Find the kind of investments that can change everything for you with this full-featured resource that includes documents, photographs, videos, and step-by-step insights. It's insane to pass it up because of how fantastic it is designed to be. Use my Moomoo link to get $100 in free NVDA stocks, up to $1,000 in value when you spend $100. Positioning yourself while you can is a no-brainer play. Returning to Ethereum now. Ethereum, ETH, surpassed the $4,000 mark last week, and it is currently trading at over $4,200. The $4,000 price objective that Tom Lee had anticipated earlier this year was utterly destroyed by that. In contrast to ETH's meteoric rise, XRP has been stealthily easing up, reserving energy for its own impending surge. This is a classic example of a healthy correction before momentum increases again, not a bearish indicator. I find Tom Lee's take on this to be rather interesting. He made the observation that, at least for the time being, the price of ETH is not always determined by its fair worth. Traders engaging in pair trades, short-term wagers against ETH, and the targeting of liquidation levels all contribute to the increased volatility. However, the most important thing to remember is as follows. Lee thinks that Ethereum is currently experiencing its Bitcoin 2017 moment, with Wall Street finally fully supporting it. What does that have to do with XRP? For the simple reason that this is a carbon copy of the December configuration. The next wave of liquidity will likely go into other top-tier altcoins if Ethereum reaches a critical high and institutional capital begins to cash out. In that hierarchy, XRP is at the very head. A capital inflow of tsunami proportions might hit XRP if Ethereum reaches its peak, which is expected to happen within the next 30 days. There has been prior occurrence of this pattern, and it occurs rapidly when it does. Liquidity rushes rather than trickles when the tide changes. The current setup is frighteningly similar to what we witnessed in earlier cycles. However, ETH's price activity is just the beginning. Tom Lee continued by highlighting the crucial role that staking and treasury management play in Ethereum's ecosystem. He drew parallels between the Bitcoin accumulation rates achieved by MicroStrategy and these. By the end of the 5th year, MicroStrategy had amassed 3.2% of the total quantity of Bitcoin. Just picture Bitmine or a similar firm doing the same thing for Ethereum, but 12 times faster. Indeed, that is the case. Wall Street is ecstatic about the completely compliant structure in which this is taking place. Why? For the simple reason that Wall Street prefers to deal with Ethereum in a transparent, legally sound manner that complies with US regulations. Moreover, ETH isn't your average cryptocurrency, as Lee pointed out. From stock markets to money markets, it is well positioned to become the main blockchain for tokenizing assets in the real world. Institutions are flocking for that reason, but now we've reached the turning point. The technology behind Ethereum is solid, but it isn't perfect. When compared to other options, it isn't the quickest, least expensive, or most efficient. Blockchain technology such as XRP's Ledger provides unparalleled speed, cheap fees, and fast settlement. When it comes to widespread use, these are a must. They play a key role. Ethereum is currently the hottest commodity on Wall Street, The reason behind their influx is that it's a well-known and trusted name in the cryptocurrency industry. Even so, market conditions change. Capital begins to seek out better technology as the dust settles from the hoopla and the true performance indicators are compared side by side. When institutions begin reallocating, XRP is the logical next step due to its scalability, low transaction costs, and superior transaction speed. Now, for the exciting part, a single event, the approval of the XRP spot ETF, might speed up this reallocation. Potentially launching in September, these ETFs could attract a swarm of ordinary investors who will drive up demand to a point where institutions can't turn a blind eye. The snowball effect starts at that point. As liquidity builds up, price activity becomes explosive, and the cycle continues. Ethereum serves a purpose and will continue to do so, but it is not the final blockchain. It serves as the present staging area. Assets like XRP, which can genuinely underpin a global financial system in real time, will be sought after by the smart money as Wall Street sets up shop there. Right now, things aren't happening at random. This is just another example of the same market mentality. Concentration, peaking, and subsequent rotation of liquids occur. Plus, XRP will receive more than simply spillover when that rotation occurs this time. It's ready to be the primary focus. Not content to be only passive investors, Lee also stressed that ETH treasury companies are essential infrastructure. These are the nodes that hold the network together and get rewards for staking. Nevertheless, this does not alter the reality that XRP's ledger excels at specific types of low-cost, high-volume global transactions, which Ethereum just cannot effectively replicate. And when those institutions begin to crunch the numbers, they will beg for publicity. This very second, not in a few years. This highlights the critical nature of the following 30 days. We are getting closer to the spinning point with each passing day as ETH increases. When it does, the capital shift might be the most dramatic and rapid in cryptocurrency history. The main point is this, but I could go on and on about Tom Lee's observations. ETH's current dominance is laying the groundwork for XRP's launchpad. We've witnessed it already, and now the stars are converging on a repeat performance. The only difference this time is that there are more people involved, a larger stage, and far higher stakes. The exciting part for XRP holders starts now. At this time, Tom Lee is absolutely correct in portraying Ethereum as the docile, Wall Street friendly blockchain. However, today's institutions that are buying ETH are not doing it haphazardly. The same firms that rebalanced aggressively following Bitcoin's previous significant runs will do the same here. Once they've gotten the most out of Ethereum, they'll quickly move on to the next top tier asset that offers the biggest asymmetric benefit. At that point, XRP will be the center of attention. Consider the implications of that. Massive influx of funds from Wall Street, hedge funds, and sovereign wealth funds. These players aren't slacking off. When they make a hit, it can affect whole markets. In addition, the XRP ledger's efficiency, when coupled with that type of money, creates an ideal environment for price explosions. Just as Tom Lee had pointed out in December, we had seen indications of this before. As liquidity spilled over, XRP soared to new heights as ETH topped and cooled. A turbocharger is used this time. There needs to be increased public awareness, a larger pool of potential crypto investors, easier access to exchange-traded funds, and infrastructure that complies with regulations. Additionally, it should be noted that the authorization of an XRP spot ETF has the potential to ignite this entire process. Inflows will occur regardless of news headlines once retail investors see the ticker symbol in their brokerage accounts. They're going to go right to work. The volume will be perceived by institutions as an indication of rising demand, prompting them to expedite their entry. A snowball can become an avalanche in that way. Ethereum, ETH, will continue to have tokenization opportunities and staking returns, but it will be challenging for ETH to maintain its current performance once investors begin searching for the most efficient settlement layer globally. Therein lies XRP's strength. When the technology can resolve what other chains take minutes or hours to settle, there's no need to convince people of its merit. Additionally, Tom Lee brought up the fact that ETH treasury operations are involved in the construction of financial infrastructure, not merely the storage of currency. Yeah, I get it. On the other hand, XRP's design prioritizes worldwide low cost, high speed transfers. The design of the ledger isn't attempting to do everything. The company is focusing on perfecting a single area, the transfer of value without any friction. That kind of specialization is what succeeds in the global payments business, which is worth several trillion dollars. Capital markets are insatiably seeking yield, which gives XRP an additional advantage. Staking ETH now might result in favorable yields, but as more ETH is staked, those yields could compress. Institutional use cases for XRP, such as liquidity provisioning and cross border settlements, can produce yield like revenue streams that Ethereum, ETH, cannot achieve without layer 2 complexity. Imagine a scenario where XRP ETFs are introduced with more institutional support and ETF's price growth decelerates. You can bet that the largest market makers and funds are already plotting out that combination because it is the ideal rotation scenario. This is the truth. This is a really rapid process. Most investors miss the rotation because the majority of the gains have already occurred. It is crucial to prepare now for this reason. In the interest of thorough preparation, please take a moment to scroll down and get the Ultimate Millionaire Investor Guide, Find 100x Stocks, from the pinned comment. It is yours to keep. Including photos, videos, and documents, this bundle is jam-packed with tactics and insights to find investing possibilities that can change your life. It's profound. The goal is to provide you with practical tools that you can start using immediately. Also, if you deposit $100 through my Moomoo link, you can secure up to 1,000 free NVDA stocks. Just by establishing yourself, you're getting free stock in one of the most exciting firms out there. The market setup is now our focus. The rapidity with which public opinion can change is another important consideration. It used to take months for money to move from one big asset to another in the earlier cycles. This transition can take place in a matter of hours or even days in today's hyper-connected market, thanks to tools like on-chain analytics, social sentiment tracking, and round-the-clock worldwide trading. This is why XRP holders react so strongly to the words, "a switch will be flipped." The storyline isn't going to change gradually. Rather, it's going to turn suddenly, and those who act quickly will reap the most rewards. The impending race for supremacy on compliant blockchains is something that Tom Lee may not have explicitly stated, but is implied in all of his statements. Although Ethereum has a head start, it can yet be overtaken by competitors. According to market history, XRP's foundational elements are precisely what the industry needs to take the next step forward. And this is true across industries, not only in technology, but also in banking. Cash flow corridors, Ripple has been developing lately. When ETH's run slows, the scalability of the ledger and its connection with financial institutions will be in a prime position to take advantage of the flood of capital that will soon follow. In this scenario, Ethereum reaches its maximum, XRP experiences a deluge of liquidity, ETFs allow ordinary investors to enter the market in large numbers, and institutional demand solidifies for the foreseeable future. No, that is not a made-up situation. We've witnessed this similar cycle in various forms across other markets. However, the speed and transparency of crypto have magnified it. Is that all? With each day that ETH rises in price, the window of opportunity to position before the rotation begins gets less. We are getting closer to the pivot with each percentage point that ETH acquires. Plus, XRP stands to gain a lot when that pivot takes place. And once that change starts, it won't stop until everyone is caught up.